morning or good afternoon, depending on where you are in the United States. And thank you for joining us for our new webinar, Understanding Property Management Exposures. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and I'm going to be your instructor today. But also with me, I have Lexi Johnson, our professional liability underwriter, and Jacob Cole, our marketing coordinator, who takes care of everything behind the scenes. Lexi will be available to answer questions as we go along. And so without further ado, I'm going to go ahead and get started. So of course, most of you have been to a webinar and the logistics are the same. You will be muted, but of course be able to hear. But for us, your voice is important, so please pose any questions in the chat room as we go through the webinar and at any time, and I'll stop and answer them for you. There'll be a short survey at the end of the webinar, and we'd really appreciate your feedback. So let's start with the objectives today. This is a great business opportunity, and I'll talk a little bit more. It's also a cross-sell opportunity, which is an opportunity to write a lot of policies with one company. You're going to learn about property management exposures, and that's really a place to start, especially if you're not writing this type of business currently. And those of you that are may only be specializing in one type of property management company. And so it'd be great to learn about others that you could expand your horizons. Also, let's connect the dots with some claims examples, better understand what's going on, and then how to best market the business. So we will get started and talk a little bit more as we go along. So this is a big business in I'm going to say internationally, but in the United States is really where our playing field is. There's a lot of property management companies, so it's a great insurance opportunity. How many different types? Well, I mentioned that there are a number of them. The types of properties that can be managed, and usually there's property management companies will specialize one way or the other. I'll get more into that later. But single-family homes, condo units, apartments, condo and homeowners associations, vacation properties. What about mobile home parks? And then you get more into your commercial side, which is office, retail, industrial, and self-storage. Also, you can have some mixed-use buildings that might have office or retail mixed in with, usually it would be probably a condo association of some sort on the top. So, and also you have self-storage, which I didn't mention. So what I meant by point of sale is it's a great opportunity once you insure the management company to insure all the properties under their management. Opportunity to go in and say, hey, I've done a great job for you taking care of your exposures. Now let's take a look at your property exposures and see if those are properly insured. It gives you that opportunity to write other policies for that management company. So understanding property management. So most property management companies, if they're smart, will utilize a management contract to memorialize all the terms of the services to be provided. And in that contract, it's going to obviously establish what the fees for that service will be. So that's a management agreement. That's an important part. What usually is the most important part for the management company in that agreement is that there will be an indemnification clause that contains holds harmless language designed to protect the property management company. That is an important factor because we'll talk a little bit later, because there's a lot of exposure for the management company tied to the property that they're managing. And I'll get a little more in detail as we go, but that indemnification clause is important. In addition, to fund that indemnification clause, you would want an additional insured. They will include an additional insured requirement for the owner's liability insurance. So that becomes pretty important that they be named on all the liability policies for that property. And that funds that indemnification clause, which indemnification is like an insurance policy to bring you back to where you were, no more, no less, after the loss. Let's consider the types of properties managed. You clearly see the management company's liability exposure. That is definitely a place where we need to take I'm going to talk a lot about this, where you need to take a look at what each different type of management company's exposures. It depends on what they're managing. As we mentioned, the different types of properties they can manage. That exposure changes depending on what type of property they're managing. Okay. So, property management exposures. So management companies are exposed, by losses caused by the sole negligence or named along with the property owner in a lawsuit connected to the premise of the managed property. So let's start with sole negligence. Sole negligence is where the management company makes an error and it causes financial damages to the client, to their client that the property they're managing. In that case, that's the liability of the property management company, and they should accordingly carry the appropriate insurance to cover that sole negligence. And sole negligence, you cannot be indemnified. Remember I talked about an indemnification clause. If you are solely negligent, you can't be indemnified. It's against public policy. It's in most states. So you have to use your own insurance when it's your own sole negligence. You can't be indemnified by a third party. So are the exposures different based on the types of properties managed? Yes, they are. So typically, depending on the type of property managed, we want to talk about that. If you're named along with the property owner in a lawsuit connected to the premise, some of these management agreements are stronger than others. So let's just say you're managing community associations, right? Those condos, homeowner association type risk. That's a lot more sophisticated. You're going to have strong management agreements, and they're acting at the direction of the board of directors, and the management company is taking direction from them and just facilitating and implementing the board's decisions. So in that case, they're a lot of times named along with those community associations in a lawsuit connected to the premise. And that in those cases, that's where your indemnity clause and your additional insured will come into play, because that management company needs to really turn those claims over to open a claim with those premise policies of the client's property. And so that really you start to look at. But if you're managing maybe apartments and single-family homes, you are more of a traditional property management company, and then you find yourself usually with a different type of exposure where you're actually making all the decisions for the client, and it's harder to enforce any kind of indemnification because your hands are in the cookie jar, making decisions solely, right? So you're back to sole negligence there. So it gets harder to really enforce an indemnification clause because you're making decisions for the client. So what types of claims do you typically see? I'm going to talk a little bit more about this as you go, but again, it will vary by the types of properties that you're managing. Where and I'm going to hit a screen shortly that will go into more detail on those types of claims. So let's start by, we're going to go through these, not in complete detail. We're going to talk about what types of property management companies would need these types of coverages, and but these are all the coverages that you would want to consider for a property management company. And you can see that there's a wide variety of liability policies that, well, they're needed for most companies now, and you have to make sure that you're offering all the coverages they potentially could need. Otherwise, it becomes an E&O exposure for your own company. So let's start with errors and omissions, your E&O liability. It's a professional liability policy, and why? It's because this policy is designed for professionals, people with a special skill, knowledge, training, judgment, and expertise. They are considered the specialist, the professional that you want to take guidance from. It is termed on most E&O policies professional services, and that services performed by the insured, usually for a fee. It's always for a fee. So here's a little bit more on E&O. The client relies on the expertise of a professional, right? So you're going to use them and expect them to be the professional. And then due to this relationship, the client can suffer a financial loss. So that's really the purpose of the E&O policy, and that's the difference between general liability and E&O, is that it's really designed to cover a financial or economic type loss, not bodily injury or property damage. That's excluded on an E&O policy. I'm not going to go into heavy detail. We have other E&O webinars on our website that you can go and watch that will actually go into more detail in this area if you'd like to learn more about the difference between E&O and GL. But so if the client feels that there's been a financial loss that could have been avoided, they will generally allege that sole negligence we were talking about on the part of the professional. So that's really what an E&O policy is designed for. So here's what I was talking about before about, well, what types of claims, and those different kinds of exposures are really vary by the type of properties being managed. So diminished value could probably be on any property managed. That's definitely designed for, like, you've done a terrible job maintaining my property and the value of the property has diminished. That's an E&O. It's an alleged economic loss. Whereas wrongful eviction is usually designed, it's got different purposes for different types. So traditional property management, this is going to be very, very relevant, very important, because you're doing a lot of leasing and you are actually involved in a lot of potential evictions as the property manager of single-family homes, apartments, et cetera, et cetera. So it's an easy thing to allege wrongful eviction. With community association management, you would definitely, and you would also see this on the commercial side with office building tenants as well. But on community association, this would be more if you were evicting a homeowner because they haven't paid their dues, and you're foreclosing on their place. That would be an alleged wrongful eviction. So that could happen there as well. Failure to maintain, it probably would go along with diminished value because they're alleging that you didn't maintain the property. And So this would be different. This would be far more important with a traditional property management where the that manager is more involved um, in actually controlling the maintenance of the property, whereas community association, the board is responsible for that. So there's difference. Also, administrative and financial errors. If you're doing the accounting for like a community association and you're handling the financials, that's definitely easy to make errors in that area as well. Regulatory compliance is also, is the property kept up to code relative to, federal and state regulations. And then libel and slander. Personal injury is usually included on an E&O policy. So you would want to make sure. I don't see it too often in the business, but it's a coverage that's important. Real estate sales activity, that usually can be added or included on an E&O policy for property management, and sometimes they do a little bit of real estate sales, so that is important. And then you want, if the property management company personally owns any of the property being managed, then you would want to make sure that you have that coverage on the policy. So another coverage that was on that list is tenant discrimination, and this is it's been a growing area for a while, but it's just sort of an irritating coverage that really is needed in the industry because it's an exposure tied to anyone who feels that they've been discriminated, either in the leasing process, or like in a community association, you could have someone who the ADA, where they feel like they're being discriminated because they're handicapped. So there's so many, and the definition of disability has evolved substantially over time, so that you really need to pay attention to this. This coverage can be added to an E&O policy. It's a separate limit of coverage. Usually it's a sub-limit, and it's not very expensive, but it's definitely worth having because I see a lot of these just small, messy claims come in. So next, let's talk about employment practices liability. Now, this, depending on what state you're in, the exposure. If you're in California, it's a super high exposure, but I believe that is a growing exposure in every state, especially COVID has brought on so many additional claim scenarios tied to COVID relative to so many layoffs and that kind of thing. But it's really important to make sure that coverage is offered at least to all of your clients that have employees, but especially to property management companies. I see a lot of claims in the property management industry related to wrongful termination, and usually wrongful termination or some form of discrimination. So that's usually I see a little bit of workplace harassment, but more in the discrimination and wrongful termination area. So very important to at least offer it. And we've got some proposal templates on our website that actually offer all of these coverages on one template. And so you can take that, make it your own, and use it. You'll find it under broker tools and templates. So directors and officers liability. So this coverage has sort of blown up and become a lot of carriers have sort of stepped away from this coverage because COVID, it was already starting before COVID. COVID made it much worse because there's a lot of lawsuits flying over what's happened to companies relative to COVID and decisions that the board of directors have made. So really, I would find that your exposure, you can see here, this is where directors and officers, the board of directors, the company itself can be held, personally responsible for decisions that they make. Now, smaller companies don't necessarily have a very big exposure, and the coverage can be a little pricey, especially now. So really, this is one you really need to look at and talk about with your client just to find out, because you can see 39% of private companies with 25 or more employees, that's where you're seeing the lawsuits. But it's only 39. I'm sure there's lawsuits happening at the larger companies for sure, especially from COVID. But let's just say maybe you're not writing the big the big companies or 25 or more. Maybe it's under 25 employees, and that really is where you've got to talk with your client and really find out, do they have any non-employee or non-officer board of directors that are on the board? Do they have a family dynamic on the board that is in conflict, a potential conflict, or changes that are going on that might cause a future D&O claim? So that's really what you need to find out, and then make decisions or propose coverage accordingly so that you've done your due diligence. And again, if the lawsuits could come from all over the place: employees, shareholders, investors, competitors, suppliers, customers, and lenders. So it really can be a wide variety. But usually it's when there's not a cohesive board of directors that is where the problems start to happen, and then it falls down to these levels of lawsuits. Okay, well, I don't know how many of you know about cyber liability and what's going on with it, but this coverage, 5 years ago was really like, the claims that were happening are totally different from the claims that are happening now, and so there's a bit of chaos with cyber liability coverage with carriers today. So back 5 years ago, this really was designed for the security and privacy claims alleging liability resulting from security breach or privacy breach. That's what all the claims were 5 years ago. Not as much in the multimedia liability, but that definitely is an important coverage that usually comes along with a cyber liability policy. But what really has been happening, and I'm going to go to our next page, is that it's turned into a hemorrhage of ransomware, which are your cyber extortion. It will be covered under your cyber extortion coverage. It's blown up, and COVID really made it worse because you've got all these hackers running around and everyone's stuck at home, right? And all the businesses are shut down, so it was really like free reign for them. But that they're really getting into small to large companies, and they're hacking in either via an email or direct into people's servers, and they're taking possession of the server, sometimes extorting sensitive information and removing it from the server, sometimes publishing it. But number one, they're holding them ransom, and usually that ransom is quite a bit of money. And then when you have insurance, they're going for policy limits. So it's become a nightmare. So many carriers have dropped out or not writing the coverage, and those that are left in are really definitely they're requiring full monitoring systems that are 24/7 for monitoring for hackers, and it's inexpensive. They call it EDR. I'm trying to write. I had some notes on it, but you're going to find that on every application for the carriers that are writing now. So it's going to be like, in order to get a quote these days, your client has to have full monitoring, and it's costing it. I'm looking at this for my own company. because in order for us to maintain our cyber liability coverage, we're going to have to spend this money in order for us to have the 24/7 monitoring of hackers getting into our system, and it's expensive. So I'm trying to make that same decision. So I just want to warn you that this is not just for the property management industry, and they do have a cyber exposure. Everyone's got a ransomware exposure, and that is the hot coverage that is needed by every business today, including my own. So that it's something that you want to talk to about, and if you have additional coverage on this, I have some articles that might be helpful for you to read, so you can reach out to me and let me know if you want further information on this. But be careful when you're talking. You need to offer it. This is very important because they're highly likely to have a ransomware attack. So you need to offer it, but then you need to be able to explain to them that when they're filling out that app, they're declining to quote if you don't have that EDR, or you can at least be able to say that we're engaging that service currently. There's probably not going to be the ability to get a quote, so it's better to talk to your client about this and have them, touch base with their IT people and see what kind of services that they do, monitoring services that they currently have in place. Okay, so now on to general liability. This coverage is another one that's sort of hemorrhaging for all types of property management companies, and this is bodily injury and property damage that happens at the premise of the client's property that you're managing, right? And that does like slip and falls, that kind of thing. So really what's happened is there's two types of coverage for a property management company when it comes to general liability. It's a office premise only. They call it a designated premises policy or endorsement. And that's really where it's only going to cover the property management company's office, right? And sometimes I think the coverage should only be that because they get pulled into when they have the comprehensive general liability. The GL will extend to the properties managed, and it gives you higher to non-auto liability coverage, which is important as well. Some of the premise, I'll just going to say this, but some of the premise only, you can add the higher to non-owned auto too. So it just depends on the carrier. So the important thing to look at, and what's changed in the industry, there's been a lot of claims where the property management company is being pulled in, as I mentioned earlier, on these types of claims that are happening at the client's premise where there's a bodily injury. Yeah, mainly the big ticket items on claims is going to be bodily injury. Someone's injured at the premise. Well, they sue both the management company and the client. And the client never has enough limits, usually, maybe $1 million, right? And so the management company's policy, general liability policy, will get pulled in. Even if they've got an indemnity agreement, a lot of times it's pulled in. And so there's been so many claims that the rates for the comprehensive general liability that extends to the properties management, the premiums have gone up, skyrocketed. And I mean skyrocketed. So it's been, and this has been going on the last 6 months. It's really gotten bad. And so it's really something you've got to be aware of when you're looking to insure a property management company, because it's going to be expensive for them to get that GL to extend to the properties managed. A traditional property manager, well, they're making a lot of decisions for the clients, so I really think that they have to have it. And the premiums are going up. Some of the carriers are not even writing anymore. So, but there's no sweet deal out there on that. So it's better to be straightforward with your client about it. And then those that may be managing something less exposure, or even a community association, a management company, they might elect to only take the premise only because they enforce their indemnity agreement and they don't get pulled in. So also to consider maintenance departments. Obviously, they're going onto the property. You have to have that GL coverage to extend to your maintenance people. And again, if you have any questions, drop them into the chat, and I will answer. Alexi and I will answer those as we go. So other coverages to consider. Obviously, property is going to be important. You know, if they own their building, all their business personal property, computer and media, you know, obviously business income, that's going to be, you know, you're going to obviously need to evaluate that with your potential client. And then, of course, my phone would ring. I turned one off and the others didn't turn off, so excuse me. Okay. So fidelity is another one to consider. It is, there's a couple things going on in the industry. So there's one that's not on this list that should be. So employee theft is really important. A lot of fidelity losses occur in this industry, so it's important to have this coverage. I prefer a standalone policy, and we can Lexi can quote all of these coverages for you, but I prefer standalone. You'll get the employee theft coverage. You want computer fraud and funds transfer, so that if a third party hacks in and takes the funds out of your client's account that you have care, custody, and control of, you would have coverage for that. And then there's also a third one that's very important, especially if there's any kind of wire transfers going on. Deception fraud is the coverage that's really designed to cover those type of exposures where a hacker intercepts the emails and then sends the coordinates of where they want it sent to, and the money gets transferred to the hacker rather than to where it was supposed to go. So those just you know, a little bit of information on that. And then I like to see an umbrella, especially if they're doing the off-premise coverage on the GL. You want that umbrella. You want some extension of coverage, 1 or 2 mil. Depending on the size of the management company, you may be going up to 5 mil. And by the way, umbrella premiums are also going up, so that just be aware of that. Don't be surprised when you see some, you know, higher premiums coming through. And then last but not least, workers' compensation is another. Darby in our office handles the workers' comp, and she knows we're really specialists in property management, workers' comp. So we in all of these coverage for property management. So she will know how to help you if you always want to be writing all the coverages for your insured. Okay. Here's a cross-sell opportunity. Well, you know, you've got all of these properties that they're managing, and this makes a great opportunity, as I talked about before, for you to go in and say, hey, let me do a review of your client's insurance, and then create an expiration list and for all the policies and provide insurance proposals as they come up for renewal. It's a great way to be, you know, to serve that client in multiple ways and write multiple policies. So that concludes our webinar for today. I want to thank you for joining us. But most of all, please visit our website. We have lots of broker tools. We have marketing tools. We have proposal templates, as I mentioned. We've got all kinds of webinars and little short videos from 2 to 5 minutes that are educational. And then lots of webinars that you could watch at your leisure or see upcoming webinars that are about to happen. But reach out to Lexi if you've got any questions. Her information is on the screen. She's more than happy to help you. And thank you again for joining us, and I look forward to doing business with you.
Renee, it looks like there's one question as well.
Oh, my thing closed up. Sorry. Thank you for reminding me. Why is it not opening?
I can read it. It says, how feasible is to prove that a tenant of an applicant was discriminated?
Say that, here it is, right there we go. Okay. How feasible is it to prove that, well, so no one has to prove anything. It's if they feel like they've been discriminated, and by the way, this is sort of an area where there could be some fraud, where, some people, yeah, we know that with ADA handicap situation, that there was a huge amount of fraud in that as well, where they would go in and purposely try and trip up a restaurant owner or something like that, and they were going around from place to place to place, just getting a quick settlement from them. So we know that there's fraud with potential discrimination allegations, but it really isn't a matter. They don't have to prove anything. If they're connected to an attorney or someone who's sending out letters on their behalf, all they have to do is allege, and that's where the problem comes in. Because especially if it's just it doesn't even have to be a lawsuit. It just has to be a letter that really puts the owner of the company behind the 8 ball in order to respond and potentially address the demand that's going to be made from that alleged discrimination. So I hope that answers your question. Do you have a follow-up to that? Please type it in. Okay, again, thank you so much for joining. Have a great day.
Thank you.